You got to remember, in March 2020, during the COVID sell-off, the Fed moved in to help the markets by providing liquidity. What did they do? They bought fixed income ETFs to give the bond market liquidity, and BlackRock basically did that program for them.
Yeah.
You have some people call BlackRock the fourth branch of government. So this is a big deal. This company is I can't overstate it really how crucial they are. Largest asset manager in the planet.
Welcome back to Money 101. In recent months, Bloomberg analysts Eric Balchunas and James Seyfarth have been our go-to sources for updates on pending spot Bitcoin exchange-traded fund applications awaiting approval from the U.S. Securities and Exchange Commission. Despite the SEC's silence and the mandated silence from the concerned firms, Eric and James have consistently provided valuable information about meetings between the firms and the commission, application updates, their implications, and when we might anticipate the SEC's approval. As of now, Eric and James maintain a strong conviction, placing a 90% likelihood that the SEC will approve at least one spot Bitcoin ETF by January 10th, 2024. In a recent interview with Blockworks Macro, Eric delved into the intricate details and nuances of the applications, emphasizing the monumental impact an approval would have on the entire cryptocurrency industry. During the interview, Eric underscored the significance of these applications, particularly highlighting BlackRock's role as the world's largest asset management firm, a powerhouse so influential that it's been dubbed the fourth arm of the United States government. Eric expressed his initial disbelief at such a colossal player in traditional finance expressing interest in Bitcoin and the cryptocurrency industry. However, FTX's collapse served as a wake-up call for BlackRock, revealing a vast and entirely different realm of opportunities. Eric asserted that, after years of skepticism, these financial giants now recognize the immense potential within the cryptocurrency industry. According to him, there's no turning back for them, and they are going all in to secure approval, investing substantial resources, including tens of millions of dollars in advertising revenue, to make this venture a resounding success. Stay tuned as we present clips from the interview where the Bloomberg analyst unveils intriguing insights about Bitcoin ETFs, the applicants, their chances of approval, and the broader implications for the cryptocurrency industry. Watch, share, and like this video. Subscribe, turn on post notifications, and drop your comments to help broaden the video's reach. Thank you, and enjoy the content.
I didn't think BlackRock was even looking at this. And because over the last 10 years, we've seen filings come in, but they're always from these, we'll call them the mid-tier issuers. There's the top 5, and then there's VanEck, GlobalX, ARK. These are all legitimate issuers, but they're not in the top 5, and especially not the top 3, especially not the number 1. The BlackRock filing is just mind-blowing, and they have so much going on. You just think and then Larry Fink, we all remember him kind of trashing crypto 5 years ago, so it made no sense to me. And so when I saw it, I was like, oh my God. So James and I quickly huddled, and our odds of approval went from 1% to 50 instantly.
Wow.
Because it was what does BlackRock know? This makes no sense. If any other issuer file besides BlackRock, Vanguard, or maybe State Street, we're just not moving our odds. So anyway, they went to 50%, and then we started to dig through why, and then Larry Fink goes on Fox News or Fox Business maybe within a week of that, and he starts calling Bitcoin digital gold, and it's the new thing, and I'm like, oh my God. So we stopped at 50, and we thought, okay, and then we thought, he clearly is into this, and we then looked at their annual report, and we realized he had a couple things in there that he was looking to do that I thought were revenue generators. So I think BlackRock largely sees a revenue opportunity, but I also think they see a revenue opportunity, but a disintermediating opportunity. BlackRock has a little Vanguard in them. They do like to go in and disrupt. And I think they see that the crypto exchanges, A, are expensive, and B, after FTX, can you trust them? And that was something they saw probably. They're like, hey, we can make it safer and cheaper. So anyway, they launched, and then other people followed suit because they did. And then we sort of look at the Grayscale case, and we're like, wait, if Grayscale wins, this could really, maybe BlackRock, this is like a call option. In case Grayscale wins, BlackRock will be right there. So then we had all these theories on BlackRock being there, so the SEC could hand them the keys and not Grayscale. And anyway, long story short, Grayscale won their case, and our odds went to 90. By the first final deadline, which was January 10th, which is coming up, and we're still there. And so, but to your point, BlackRock was a shocker, and in the grayscale winning, we only had a 40% chance. So even that was a bit of a shocker, although 40% was pretty reasonable, and they won. And so I think those two things really got us on this trajectory up to 90%. And then the final thing that was huge was seeing and hearing back channel that the SEC was engaging, saying, here's our comments on your prospectus. Because up until then, and your 10 years, the Winklevoss twins started it, every time we had these cycles, it would be like 10 filings, and then radio silence, delay, and then radio silence, denial. This time we heard there's no radio silence. They were talking to the issuers, giving them comments. Then you saw the prospectus coming in, updated. That was major, and that justified our 90%, we thought, because that's normal. And so normal was a break from the pattern. The radio silence denial thing is abnormal. So it was a pattern of abnormalcy for 10 years. And now we have normalcy. That's a good sign. So that's sort of where we are now. And there's obviously some other little nuances we can get into, but we feel like now we're feeling pretty good that we stuck our neck out there. We were a little early, and we were a little optimistic versus our peers and versus some other people. But we held the line, and it looks like it's a pretty good chance they will be approved by January 10th. The volume will be underwhelming after BITO, because remember, BITO launched in a mania. October 2021 was a mania. It was like Beatlemania, but Bitcoin mania. So that's gone. The thrill, all the mania is gone. And those little retail investors, they're either using Coinbase or they're just once bitten, twice shy. I don't need crypto anymore. So all those minnows that bid on BITO the first day, I don't think they're in the lake anymore. What's in the lake though underneath is these bigger fish, these advisors. And they don't rush to the bait, okay? They're gonna swim around it, look. So the good news is the bigger fish are there. They're hard to catch and they don't bite early. So you're probably gonna see a lot less volume and assets early. Again though, we will see enough to see which ETF gets some mojo, but it's over time, over a year, 2 years, 3 years, that I think we see somewhere 20 to 40 billion in this category. If you extrapolate the spot Bitcoin ETFs in Canada and you extrapolate them to the size of the US market, you get 70 billion in the US. If you extrapolate Europe, you get to 30 billion. So we're kind of in the middle. 45, 50 billion is where we think the US market will be after a couple years. And then maybe it inches up to 70 billion. That's right where gold is about. And that puts you at 1% of ETF assets. So that's our general estimate. But because advisors are the bigger fish who are going to swim around a little bit and wait to see which one's successful, which one's cheapest, but once they bite, they're big. So that's the good news. So I think we're going to see incremental big bites from model portfolios and advisors, but they're not going to rush in the first day like we saw with BITO.
My question to you as well is, okay, there's the 1% maybe for the Bitcoin spot ETF. Like, how likely is it, or how much relative attention are these other potential crypto ETFs going to attract, do you think?
I think minimal. And the Ether futures ETFs launched, they really kind of, nobody cared. And I think the question, we know they don't, people don't like futures, especially advisors. Like, they don't want derivatives. They'd rather have spot.
Right.
But even the Bitcoin futures ETF has action. I mean, it still trades like, let me see what the trading volume on that's very good. It will dwindle once the spot launches, but right now it's the only game in town. It trades $300 million a day. It's very good. So nobody really using the Ether futures ETF. That's probably a bad sign for like the what comes next crowd. Would a spot Ether do better? Probably. It would do better than the futures, that's for sure. But how good would it do? I think for most advisors, and again, normal people who are not into this that much, I think Bitcoin's plenty.
Yeah.
I think they're largely going to go around Bitcoin. And you do have some pretty big advocates in your world saying, like Saylor, there is no second best. But like Matt Hogan, who's someone I trust, who's, he's from the ETF world, but is pretty much embedded in crypto now. He thinks Ether is a bigger deal than Bitcoin. I don't know, but even with him saying that, I know, like, if for my regular person, if I'm just sitting there and thinking my own personal account, I'm probably thinking, you know what, honey, just buy a little of this Bitcoin. It'll move with Ether. They're all the same. It's good enough. It's the one. We don't need to go crazy here. That's sort of, I think, how most people are going to play this.
Regarding GBTC, Eric outlined that it will eventually have the opportunity to convert its trust into a spot Bitcoin ETF. However, he anticipates that the approval for this conversion will be deferred, likely after decisions on all other pending applications have been made. Eric speculates that the SEC will intentionally postpone its decision on GBTC to ensure fairness, providing other applicants with an equal opportunity to have their ETFs approved or denied before GBTC. Notably, GBTC already boasts a substantial market capitalization of around $24.8 billion, presenting a potential challenge for competitors, even a behemoth like BlackRock if they were to be approved simultaneously. Adding to the complexity, the SEC has faced legal challenges in its interactions with Grayscale, indicating a possible motive for a measured response or even a form of retaliation. What are your perspectives on Eric's insights into the entire landscape of spot Bitcoin ETFs? Feel free to share your comments and observations in the comments section below. Additionally, don't forget to show your support by liking this video, subscribing to the channel, and activating post notifications for more content like this. Thank you for tuning in.